Good morning, everyone. On behalf of IDFC Securities, I'd like to welcome you to the Q4 and FY18 earnings call of CONCOR. The management today is being represented by Mr. Kalyana Rama, Managing Director, Mr. Sanjay Swarup, Director International, Mr. P.K. Agarwal, Director Domestic, Mr. Rahul Mittal, Director Projects. I'll now hand over the call to Mr. Rama for his opening remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Yeah, morning everyone. I'm happy to share with all of you that we got a very good, maybe I can say excellent year. In Q4 we ended up very well, and overall the FY17-18, it's very satisfactory and satisfying results. We have done a lot of double stack. We brought in a lot of new things. I'll just share with you the highlights. This is the first time we crossed 3.5 million TEUs this time, total handling. It's 3.53 million TEUs. And tonnage, by rail we achieved almost 40 million tons. That is precisely it is 39.97 million tons. It's a 15% plus growth. On road we did around 2.71, and total 42.68 million tons we did. And our FY17-18 turnover, we had operating turnover of 6193 crores, and total it is 6891. 6469, sorry. It's a total 6469. Operating it is 6256. And after discounts we moved, then it is 6167 crores. In double stack train operations, it's 97% growth over the last year. This year we ran 2297 trains compared to 1116 last year. This year we have commissioned 6 new terminals. Our presence pan-India is 79 terminals, out of which 72 we are owning, and 7 we got exclusive tie-ups. We added 13 high-speed rakes in this year, thereby increasing our stock to 288 rakes. We completed our software upgradations, and we launched our mobile app with continuous cargo visibility to customers. This we launched in the month of March. We are going ahead with our I may say baby steps in the ILM JAD and distribution logistics, and I'm sure that we will be able to do something in this financial year in the distribution logistics. We are aiming at commissioning the phase 1 in 11 more terminals this year. That will take the total number of terminals pan-India presence to 90 by the end of this FY. Coming to the segmental side, I'll give you some statistics before you can start your questions. In the railways, the total growth this year is 14.63%. If I look at tonnage-wise, and CONCOR has achieved IR tonnage growth is 14.1%. Let me correct myself, and CONCOR achieved 15.22% growth. So our growth rate is slightly better than the railways growth, and now we are having a market share of 73.59% of all the traffic moving by rail. The average lead has come down slightly compared to last year. The total lead for the company has come down from 917 to 858. In EXIM it is 740 kilometers, and in domestic it is 1394 kilometers. So handling growth, it is ISO we did 3 million TUs, that is 13.6% growth. In domestic we did 0.53 million TUs handling, 15% growth. And total, as I mentioned to you, 3.53 million TUs, 13.85% growth. JNPT, our market percentage share has gone up, JNPT to 81.5%. Last year we were at 79.2%. In Mundra, we are almost maintaining the same, 51 to 50.17. In Pipavav also we have maintained almost a similar. We are seeing some growth in Pipavav handling. Last 2 months we have seen good growth. And one more statistic which all of you are interested in is that empty running. I'll give you empty running cost for the whole year has come down from 147 crores to 130 crores in EXIM, and in domestic it is slightly increased from 109 to 123. Overall, it is 254 crores compared to 256 crores last year. So the last quarter there were some imbalances in the EXIM traffic as well as domestic when we are pushing up volume. Some imbalances have happened because of less demand in the eastern and southern markets. Thank you, and Bhumika, now we can start our question and answer session.
Sure, thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Deepika Mundra from JP Morgan. Please go ahead.
Hi, good morning. Sir, thank you for taking my questions. So first thing on the realization side, if you remove the export incentives, it seems that the realization has improved quite a bit in the quarter for the EXIM segment as well as for domestic. So can you talk a bit about that?
So the PBT for the quarter without SCIS, without SCIS. Yes, the total income has gone by 30 without SCIS is how much is 4.83% variation?
Yes. Mm-hmm.
And then PBT, we increased it around 23.34% improvement in the PBT on the quarter-on-quarter.
Okay, so got it. So just wanted to understand the improvement in per unit realization is largely because of JNPT volume pickup?
It is because of the double stack running and the improvement in our rail freight margins. So rail freight margin for the quarter is gone up to 28%. It's 27.98%. If we see the quarter-on-quarter, if you got your numbers, we started with around 23.5% in the first quarter and continued to win. And quarter 4, we ended up with 27.98% of rail freight margin. And for the whole year, we have a rail freight margin of 25.61.
Okay, thank you. So one more question, just on the outlook for next year, both in terms of volume growth and on the, we've been seeing that railways has actually not been increasing freight rates over the past couple of years. So just an outlook on that front on the railway side, what are you seeing in terms of haulage charge increases?
Yeah, I can tell you about my volume growth, what I am looking at, but on the railway side, I don't make any guess. I mentioned in many other forums that railway is looking for increasing their freight traffic. So in that scenario, let's hope that railways will have a better rationale in the freight rates. I can't make any guess on behalf of railways. But my growth rates, I'm expecting at least 10 to 12% growth rates this year also, provided the economical conditions will continue to remain the same.
Okay. And so overall, are you seeing improvement in rail share of container traffic?
Yes. That's how we could get, the growth volume up to almost 14% this year.
Okay, sir. Thank you so much.
Thank you. The next question is from Bhavin Gandhi from B&K Securities. Please go ahead.
Good morning, sir. Congratulations on good set of numbers. Sir, could you help me with the origination volumes, EXIM and domestic separately?
Yeah, Sanjay Swarup will give you the numbers.
Handling for, you want for the entire quarter or for the entire financial year?
Anything is fine, sir. I just need the origination numbers, not the handling numbers.
Okay, origination for entire financial year is, EXIM is 2025,124.
Okay.
And domestic is 266,480.
Okay.
Total 229,1604.
Perfect. And sir, also can you give me the volumes in terms of tonnage, in terms of domestic and EXIM?
Yeah, in terms of tonnage, in EXIM it is 32.70 million tons.
Right.
And domestic it is 7.27 million tons.
Perfect. And
9.97 million tons.
Got it. Thank you so much. So just one more question on the JNPT side, sir. We were given to understand there were some issues regard to the port terminal with regard to mixed trains. So if you can comment on that part, sir.
This is not a new thing. Some people may be talking now afresh on these things. This mixed train running is going on for ages.
Right.
So there is an agreement between the terminals to transfer the boxes. It is being done regularly. Now with the fourth terminal coming up little far away, the fourth terminal mixing the boxes of fourth terminal is having some issue, some difficulty there. So we are offering a solution to the fourth terminal and we are working on it. If you remember some months back, we gave a press release that we signed an MOU with PSA.
Yeah.
For doing extension gates at Jakwada and Katwas.
Right.
The extension gate concept is that we will be moving all the directional traffic from port to that on behalf of port, and port will be delivering the boxes at these places.
Sure.
So, otherwise there is no issue. The only issue is of the evacuation from JNPT, which government is watching, and we are able to do it, and there are some detentions to some boxes. So some solution is being worked out there also.
Sure. And, sir, this extension gate concept, are the existing terminals also, forthcoming on that part?
Yeah, we are working on that. That's what I am telling you, that for the boxes which are detaining in JNPT, we are working on providing maybe a concept like extension gate, because this extension gate is a very good concept, which is already a proven concept, which is working in Thailand, working in Rotterdam. There are places where these extension gates are already working.
Sure.
In fact, in Chennai, we already started doing this for DPD, DPE containers.
Right.
At our TNPM terminal.
Right. Sure. Thank you, sir. That's it for me.
Yeah. Thank you.
Thank you. Next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Sir, can I have the fourth quarter handling and originating volume, both for EXIM and domestic segment?
Yeah. Fourth quarter EXIM is 796,815.
Sir, this is originating volume you are giving or handling?
I am giving handling volumes first.
Okay. So how much is that? Can you repeat again?
Yeah, 796,815 TUs. And domestic is 154,138. Total 950,953. And originating EXIM 529,715. Domestic 77,892. Total 607,607.
Okay. And sir, in response to a previous question, you mentioned 10 to 12% growth for next year. So in this kind of outlook, are you guiding towards originating volume growth or the handling volume growth?
We talk about handling volume growth.
Okay. So
Atul, it will be proportionate. Whether you do handling or then originating, it's more or less proportional. Once I get a 12% growth here, I'll be getting almost 10 to 12% over there.
Okay, sir. Okay. And so my last question is with regards to the pricing environment. I mean, we have been seeing some benign pricing environment, in the industry. So can we expect you and the other players broadly to take some more price hikes going ahead into FY19? Because the volumes seem to be pretty decent nowadays.
Yeah, whenever there is market, see, the pricing is basically what commodity can bear and what market is favoring. So these two things we keep in mind and do that, the corrections time and again. We did last year in our domestic business mainly. So in domestic business, the margin per TU has gone up almost by 3 times, 1,200 to 37 and 35, 3600. Exact figures, can you give, Peter?
Yeah.
Everybody can note this. This is a very interesting figure we are sharing with you.
The PBT margin on domestic has gone up from 1,257 rupees to 3,459 rupees this year.
So this is what we have done. We could find that market can take some more price increase, so we increase there and we improve the margins and we have given a better service to the customers. Customers are happy and that gave us a growth of 17% in our domestic originating volumes.
Yeah, thanks a lot. And sir, just final thing. A couple of quarters ago, we talked about the initiative to benefit from GST regime in terms of offering 3PL services, etc. So any color or comment on the progress of that initiative? And by when could we see some contribution to the revenue from that?
Revenue contribution, we are not giving any forecast this year, but we will be starting our distribution logistics. We are calling it distribution logistics. So that's 3PL, basically warehousing, all value-added services, first mile, last mile services, all these put together, 3PL, we are calling it distribution logistics. And this year we will be starting. We are already taking the necessary steps towards starting this business. That will be from the existing centers as well as 20 new logistics centers we are going to open up in next 1 or 2 years.
Okay, sir. Thank you.
Yes.
Thank you. Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from Pratik Giri from Valium Capital. Please go ahead.
Are we preparing for this double stacking? I mean, how many wagons we have according to the latest tonnages of 25 ton axle weight, sir?
You want number of wagons?
No, number of wagons. Sir, the preparation in terms of...
Preparation in terms of? I'm not getting you correctly. Hello?
Mr. Giri, if you can hear us, we can't hear you. We request you to use the handset. We'll move to the next question. We seem to have lost the line from Mr. Giri. The next question is from the line of Girish Raj from Quest Investment. Please go ahead.
Thank you, sir. FY18 story was expansion of double stack operation across new locations, which drove the efficiency and margin. Sir, request, can you please allude to available levers that can play out in FY19?
FY19? I think still there is there's a lot of steam left in the initiatives what we have taken in FY18.
Sorry?
Whatever we have started in FY18, there is still a lot of steam left out in that to push forward our agenda and improve our efficiencies and margins.
Sure. So those things will continue, is it?
Yes. And new things what we are now working on, that they will be coming into more functional operations, maybe next year, next financial year, distributional logistics. And then we are adding ILM jets. So there are the new areas. And coastal shipping this year we are starting. Till now we are not moving much by coastal. We are now starting coastal shipping. That is a new initiative this year, which will add more flavor to our operations. And we started one more SAARC country operations, that's Bangladesh, by rail. Yes, we ran a first trail run in the month of April, and this financial year we are expecting to see a lot of action in that.
Yeah. So Bangladesh, Nepal, and this coastal, can you give some color on, from a financial angle, not the absolute number, but any directional potential, something?
No, that will be a guesswork, that you can do it yourself. But definitely there will be good drivers for the better numbers in the coming quarters. Okay.
So one more thing on the domestic operation, growth has been very good, but there is a lot of volatility in terms of margin. So how do we see that, sir? Will there be stable?
In what respect volatility? We increase our margins by almost 300%.
I agree, sir, but if you look at third quarter...
That's not called volatility, my friend. That is, we increased our margins. There is no volatility. There has not come down. Margins never came down.
Quarter-over-quarter volatility, I meant. Anyways, I take your point that there is... Sir, on tax rate, this year was 24.6%, but we had a higher guidance. How should we look at the tax rate, sir?
See, we get some benefits because, you know, that infrastructural status, earlier it is called Section 80IA. We had more benefits this year. So when we finally completed and crunched our numbers, we got a better benefit.
Okay.
When we introduce new wagons and new terminals we get more benefit.
So this will be similar in FY19, or how do we look at it? Just for modeling.
See, whatever has been started this financial year will continue. And now the section is changed. The income tax has introduced Section 370. Section 35. So this benefit will continue.
Benefits will continue. So it will be around 25% range, or?
You are asking many questions. Maybe the other people...
I'll pull out, sir. I'll take it. Thank you.
Thank you. The next question is from Pulkit Patni from Goldman Sachs. Please go ahead.
So thanks a lot for taking my questions. Firstly, when I look at your domestic revenue, almost 380 crore in this quarter, does it include any one-offs? Does it include any major contribution from MMLPs, etc., or is it purely the transportation revenue that we report every quarter, sir?
This is normal business as reported in every quarter. There is no one-off things in this, but MMLP's contribution is already there in that.
No, what I'm trying to understand, sir, that this is the highest domestic revenue that you've done in a long, long time. Does it include anything which is over and above what we normally do, or is it just, certain MMLPs starting and them also contributing, etc.?
See, all the MMLPs, whatever we have started, everything is contributing. Okay, so there is specific crunching of numbers for particular MMLP giving how much. But this is without any extraordinary items, normal growth and normal business in domestic.
Okay, understood, sir. So secondly, could you share the numbers on what is the total number of double stack train that you ran in this particular quarter?
Particular quarter?
Yes, sir. Like you discussed, right? Last quarter was 492 trains. Even if you give the full year number, that's okay.
The full year number I have already given you 2297. But this quarter also I will give you 705 trains.
Got it, sir. So now with 705 trains run in the quarter, what is the total percentage of double stack trains that we are running today, and what is the scope to take this number higher further?
I think this question I have answered many times. You see, guesswork I don't do, but I already told you there's a lot of steam left out in this. All the initiatives what I have taken in this particular financial year, FY17-18, all the new initiatives I discussed time and again with you people, I feel there is definitely a lot of improvement we can bring in these things, and these will be our main drivers for this financial year also, FY18-19. In addition, we will be starting coastal, and Bangladesh operations will take, already started, will go ahead. So these two things will add definitely more flavor to the operations. Okay?
Okay, sir. Very useful. Thank you.
Thank you. The next question is from Prateek Kumar from Antique Stock Broking. Please go ahead.
Hello.
Yeah.
Yeah. Good morning, sir. Sir, my first question is with respect to this domestic segment. So we had some market share gains in this particular quarter because industry seemed to be growing at a lower pace during this particular quarter. So just understanding is correct for that, sir?
Yeah. But what is your growth? You want the quarter number?
Yeah, so did we gain some market share in domestic segment? We had like this 15% kind of growth during the quarter.
There is growth for the year. Our market share has gone up from 64.25% to 66.18% overall for the year 17-18.
Quarter का है हमारा
बच्चा quarter को you can check out for the quarter also,
yeah, this you can send an email later, okay? The particular number is not readily available.
Sir, 64.25 to 66.25%.
That's for the year, overall year. Quarter का है? बताओ. Market share for the whole year we have given you the number, na, 64.25 to 66.18, okay?
18, okay. And sir, from a financial sheet, quarterly sheet, there is a sharp decline in other operating expense during the quarter. So any specific thing which we need to understand from that?
Yes.
So this number has gone from around 170 crores to 143 crores.
So that is because we started many places our own handling, so we are improving our margins over there.
Sir, it was not clear. Can you explain that again?
Pardon?
Sir, can you explain that again? It wasn't clear.
No, we started our own handling operations at more terminals. So that's it. From the outsourcing to we deploy our own machines, so there will be improvement in margins. And there was some sort of counter adjustment with railways. That is maybe a tune of around 10 crores. So
what is this 10 crores? Sorry?
This is an accountal adjustment with railways.
Okay.
Yes.
Okay. And sir, just one last question on empty running. I mean, you gave the figures for annual numbers. I mean, just calculating the Q4 number, it's around 34 crores for Q4 versus 25 for for Q3.
Yes.
So is there a sharp increase in empty running payment during this quarter?
There is an imbalance in traffic in Q4 that I mentioned. Q4, there is a lot of imbalance happened in both EXIM and domestic. The exports are not there. Now more of imports are coming into India. Exports are not picked up. And in domestic, the eastern and southern markets, there's less cargo availability, so we have to balance equipment back to north and west markets to pick up our, the cargo.
Sure, sir. That's it from my end. Thank you.
Yeah.
Thank you. Next question is from Rahul Mayarka from Jefferies.
Yeah, hi, sir. Thanks for taking my question. So I missed the lead distance number. So could you just give it for EXIM and domestic and overall for the quarter and full year?
Full year lead is now, total is 858 kilometers. For EXIM it is 740 and for domestic it is 1394.
And so
for the quarter overall lead is now 790 and for EXIM it is 714, for domestic it is 1393.
So sorry, last 714 is for EXIM and domestic is
1393.
And so can you just give the empty running for EXIM and domestic as well for the quarter?
Empty running cost for the quarter EXIM it is 34 crores, for domestic it is 32 crores.
Okay. Thanks a lot, sir.
Yes.
Thank you. Next question is from Rajeshri Maitra from CIMB. Please go ahead.
Thank you, sir. My question is on the lead distance. So, especially now with JNPT growing strongly, what is your expectation on the lead distance going forward in the next 1 year? Is it going to remain at this level or is it going to go down or up from this level?
The JNPT is growing strong and Mundra is also growing very strong.
Okay.
So, they are equalizing themselves. So, lead distance, as earlier I shared with you in EXIM traffic, my expectation is in maybe immediate this year, it may not be this year, but in the next 3-4 years, the EXIM lead will be settling down at a level of around 650 kilometers. Okay. So, we are now at 713 kilometers. So, we may come to 650 because East Coast is picking up. But there are certain positive factors happening. The Nepal is now started moving from Visakhapatnam. That's a very lead increase there. Instead of Calcutta, it has come to Visakhapatnam. Now, JNPT 410 has started. That may pick up. So, this 650 to 700 range, now, it all depends on the JNPT pickup in the 4 terminal pickup. So, if it attracts more traffic to JNPT, it may settle at 700 kilometers. My expectation is something like that. So, more than this is anybody's guess. So, these trends will be somewhere around 700. So, may not be a very sharp drop like what happened this particular financial year in the initial quarters. Well, more or less, we'll be seeing the same numbers for the next few quarters. Then once the trend settles and if East Coast picks up, it may come down to 700, maybe up to 650. So let's see what is happening in EXIM. In domestic, the leads will be around this 1400. There will not be much change in these leads.
Thank you, sir. My one other question. In the staff cost for the quarter, was there any one-off item in the staff cost for this quarter? It seems to be a little high versus the previous few quarters.
Staff cost, this year we gave arrears and also pay commission we implemented. So, there is some element on the staff cost is towards the arrears, which we paid. But in the overall year, if we look at, that is not much. There is increase in the staff cost. So, that the increase per year of staff cost will be roughly around 90 crores per year.
Okay. So, how much would be the arrears in this quarter that would have been paid?
That's in the last quarter. Q3 numbers you pick up again. You will see that we have already given those, that increase in staff cost. We paid the arrears in Q3.
Okay. Thank you. Thank you.
Thank you. Next question is from Bhavin Parekh from Marfatia Stock Brokers. Please go ahead. Bhavin Parekh from Marfatia Stock Brokers, you may go ahead with the question.
Yeah, hi. Sir, do you expect any price hike in the current year, I mean in the EXIM or domestic business?
Price hike by whom?
Okay.
By whom?
Okay, yeah, sir. Yeah.
No, I did not answer you. What is your question? I couldn't understand. Price hike by whom? By me? By CONCOR or by railways? What you are asking?
Yeah, CONCOR.
CONCOR, we are increasing our rates in EXIM from May 15th. We already gave a public notice for this.
Okay.
There will be more or less across the board increase of 1,000 rupees per TEU. Already all the shipping lines have been notified about this.
Okay, sir.
Yes.
Thank you. Hello. The next question is from Abhishek Ghosh from Motilal Oswal Securities. Please go ahead.
Thanks for the opportunity, sir. So just wanted to understand, in the month of April also, is the heightened imbalance continuing or has it settled down?
That we'll tell you when we come with Q1 results.
Sure. And so just one last thing, what would be the capex that we've incurred in FY18 and FY19 estimated capex?
FY18 we incurred 858 crores.
Okay, and
FY19 we are planning roughly around 800 to 1,000 crores.
800 to 1,000 crores for FY19. Okay.
Yeah.
Okay. And so just one thing, in last quarter you had mentioned, and also you've also made a comment in this quarter, that imbalance in domestic is quite increased because of east, north and north-south, I think. So just wanted to...
South markets not having the cargo.
Okay. But I'm saying, despite the imbalance continuing, we have still managed to do such a stupendous job on a sequential basis. So any particular changes that we have brought about by what we had done, say, 2-3 quarters back of, changing around, anything that we have initiated and we can see the benefits going forward?
We see the domestic performance for last 6 quarters, we are continuously improving.
Correct. Yeah.
Actually, we now putting a lot of focus on the service levels.
Okay.
So we are engaged with the customers and we are having prior commitments with the customers. Whatever we can do, we are telling them in advance, and we are not giving any false promises. And whatever has been promised is being fulfilled. So that has gone, in fact, the reliability factor and the dependence factor from the reliability side has gone up on CONCOR. And also we are now servicing corporate customers. So we have some sort of, adapted strategies.
Sure.
So these things have helped us in improving our margins. And as I mentioned in the earlier questions, that we improved our price in domestic where we could see that the market can bear more. So we improved our prices also. That's why our margin is increased by almost 300%.
Okay. And so the recent diesel price increases should also help us in that regard for taking some amount of market share from road?
Yes. If diesel price increases, then railways will become competitive. So that definitely helps.
Sure. Okay, sir. Thank you so much for answering my questions and all the best.
Yeah, thank you.
Thank you. Next question is from Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yeah, hi sir. Sir, in case of coastal shipping, what do we intend to do? We'll charter in ships or what basically would be the...
We'll be transporting containers.
Okay, but the shipping service will be provided by someone else.
Yeah, there will be an exclusive operator for us. That is maybe the only a special thing in our postal shipping. Whoever is going to run the service will be exclusive to CONCOR. He will not be carrying any other cargo.
Okay, sir, got it. Thank you.
Thank you. The next question is from Jignesh Makwana from Asian Market Securities. Please go ahead.
Yeah, hi sir. Just one data point. If you can provide us port-wise volume mix for this particular quarter and for full year.
Yeah.
Hello?
Yeah, Mr. Sanjay Swarup will take your question. You can repeat
What exactly do you want? I have not heard you properly.
Port-wise volume mix, sir, for this particular quarter and for the full year FY18.
Yeah, port-wise, we have for entire financial year.
Yeah.
We get our 36% volumes from JNPT.
Okay.
30% from Mundra.
Okay.
14% from Pipavav.
Okay.
7% Chennai, 6% Vizag.
Okay.
And 2.5% from Kolkata.
Okay. So JNPT you said 36%.
Sorry?
JNPT you said 36%.
Yeah. Out of our total volume that we handle at ports, 36% comes from JNPT. So total is 96%, I have told you. Rest is miscellaneous 4%.
Okay, okay. Got it. And the similar pattern is for the Q4 also, correct?
Q4 statistics I don't have with me at present. This is for the entire financial year. More or less it will be same.
Okay, sure. Thank you. That's all from my side.
Thank you. Next question is from Ashish Shah from Goldman Sachs. Please go ahead.
Sir, just one small clarification. Is it correct that we have increased the tariff by 1,000 rupees per TEU from April? That's what you said?
That will be from May 15th.
That will be from May 15th. And it will be across domestic as well as EXIM.
This is EXIM.
This is only EXIM.
EXIM, we are increasing 1,000 in almost all the streams. We are continuously adjusting our rates as and when the market expectations and market conditions we are working on.
Okay, got it. This is very helpful. Thank you.
Thank you. Next, we have a follow-up question from the line of Deepika Mundra from JP Morgan. Please go ahead. Ms. Deepika Mundra, your line is on talk mode. You may go ahead with the question.
Thank you. So just on the price increase that you mentioned, is it fully margin? Will it flow down straight to margin, or is there a corresponding increase in railway charges against that?
No, there is no rail haulage increase. Deepika, there is no rail haulage increase now.
Okay, sir. Okay, sir. Thank you. And I just wanted to understand how is Jakwara ramping up in terms of volumes?
Yes. Giving us good results, Deepika. And we are almost doing 2 double stack trains per day from Jakwara.
Okay, sir. Okay, thank you so much.
Okay.
Thank you. Next question is from Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Thanks for taking the follow-up. So I just wanted to get your views on the recent press release by Dedicated Freight Corridor Corporation, which kind of officially confirmed the delay in DFC. And now the official timeline has been pushed to December 2020. So just the question is that now it has been pushed back by 2020. Realistically, when can you see trains running on DFC? And when will you start procuring newer rakes, on CONCOR ports to run trains on DFC? And how much that CapEx can be?
You want to understand CapEx?
Yeah, the CapEx related to procurement of new rakes for DFC and the timing of that CapEx, given that DFC has been kind of delayed officially by 1 year.
See, DFC can run the same whatever wagons we are having running on IR, the same wagons can run on DFC also. Okay. And DFC specific wagon is still under trials, which is not yet cleared by RDSO. So there is no specific capex for DFC. Our capex is, we will be implementing our capex in that rolling stock capex will be not much because our capex program is more on handling equipment and containers. We are procuring, as I mentioned in the last quarter, we are procuring 10,000 containers for domestic business. That's a cost of almost 300 crores. Now they are already coming. And we are now going for leasing of rigs. So there will be an asset-light model we are adapting in this particular rolling stock because the new rolling stock for DFC, specific rolling stock, is still under testing.
Okay. So, sir, just to understand, if the current rolling stock can be used on DFC, then what is the point of having DFC specific rolling stock? Because anyways, you can do double stacking, right?
Sir, you are an analyst. If you are an engineer, I will explain you a lot of things. So,
okay.
Go ahead.
No, sir, it's okay. I mean, okay.
I'll tell you in normal common man technology is DFC can carry more weights. So these wagons which are now running on IR they are not allowed to carry that much of weight. So there will be increase in weight, so we require some different type of wagon. Okay?
Okay. And sir, is DFC likely to get delayed yet again, as per your understanding?
I think you know that I never give any guessing work, so I don't guess on that. But without DFC also, we are doing lot of double stacking. So, in fact, may not be losing our entire opportunity. You got it?
Yeah. Yes, sir. Okay. Got it. Thank you, sir.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. Next question is from Srinidhi Kalekar from HSBC. Please go ahead.
Yeah, hi. Congratulations on a very good set of results.
Mr. Kalekar, we can barely hear you. If you could please speak a little louder, maybe use the handset.
Am I audible now?
Yes, sir. Please go ahead.
Yeah, so congratulations, sir, on a very good set of results.
Thank you.
Sir, I just want to better understand the remarkable improvement in the domestic business. Sir, if I see our sequentially volumes are up like 18% in originating terms, and like empties are come down from like 60 crores to 32 crores. So is there anything structural that we have done, sir, this quarter and which can sustain going into 19 and 20 so that we have a margin that we earn this quarter can be sustainably earned? I just want to better understand that part of the business.
Your question will be answered by our director domestic, but I just want to add one thing. If you remember, I said we are building circuits.
Yeah.
So that is helping. Now, further, some more details, Mr. P.K. Agarwal will give you.
See, when the domestic, we have made certain policy in the beginning of the year, 17-18, where we said we will be giving focus for the corporate customer, where the certain benchmarking is done and the certain understanding with the service level has been agreed. And that has gained the confidence, and that has led to the increase in the volume and also the market share. And in addition to that, we could able to build a circuit where we could reduce the anti-running and get loading in the both way. That also has given us the more traffic, and the margin has increased on that car. So that will continue to be there for this year also, and we expect a better performance this year again.
So large part, it is something structural that we can expect that margins could be earned going into next couple of years, I guess. That's correct understanding, right?
Structural in the sense we are adding up the assets. We have procured, we have been procuring 10,000 new containers with high heavy-duty containers, which can carry more up to 31 tons, as against present container which can carry up to 28 tons. That will be another structural change which can give us a much better economic compatibility vis-a-vis the road, and we expect a better margin and better traffic in this coming year.
Okay, fair enough. Yeah, and sir, just continuing on the domestic part of the business, if I have my numbers correct, railways, like Indian Railways, earnings in the domestic business were up by just 2% sequentially, while Concor's growth is something like 17-18%, right? So it's a large part of market share gain that we did in domestic business has happened in Q4. So is there anything to read into that?
No, it happened in Q1, Q2, Q3 also. In fact, in Q2, if I remember, we have gone beyond 22%. It's not only Q4. Continuously we are adding.
No, in nine months, generally, if I remember correctly, in 9 months, we were growing as well as Indian Railways was growing quite rapidly. But Q4 particularly, Railways didn't do that well, like something less than 5%. But your numbers are quite well in terms of 18% sequentially growth. So is there anything that is my numbers wrong, or you have done exceptionally well in Q4?
I did not have railway numbers with me right now for the Q4 separately, so I can't comment on that. So you can rely on your own numbers and judge the things. But yes, our steps, whatever we have taken, which I explained earlier and now Mr. P. K. Agarwal explained, they are bearing fruits. And as mentioned, that coastal shipping when we start, that is going to add good numbers to domestic volumes.
Okay, sir. That's really helpful and all the best for the future. Thank you.
Bye.
Thank you. Next question is from Jaykant Kasturi from Dolat Capital. Please go ahead.
Sir, any SIS income for this quarter?
Yeah, there is. How much? This quarter. 81 crores in this quarter.
81 crores. Okay. Okay, that's it from my side.
Okay.
Thank you. Next question is from Prateek Kumar from Antique Stock Broking. Please go ahead.
Hello. Yeah, sir, thanks for the follow-up. Sir, my first question is regarding this SKS and receiving this from government, or are they still in the receivables part?
Receiving from government? What is your question?
Are they already part of our cash cash in our balance sheet, or are they still in like receivables at this point for last?
Government. It's receivables from government.
Okay, so FY17 number would be also in receivables from government?
Yes.
Okay. And sir, can you just give this port-wise market share again? Miss the initial numbers of JNPT, Pipavav and Mundra.
JNPT 36%, Mundra 30%.
No. So port-wise market share of container corporation.
Port-wise market share you want? JNPT we are at 81.5%. Mundra we are at 50.2%. Pipavav around 55%.
Okay. And sir, just one last question. We have been doing this historically on guidance. Generally expecting around 10 to 12% volume growth. Is there any specific thing on PAT guidance we have, on profit guidance?
For this year?
For FY19? Like we had around 20% for last year.
I started with 12%. 10 to 12%.
So profit guidance also 10 to 12%.
Let's start with that. As things happen, then we'll definitely revise.
Sure, sir. All the best and thank you.
Thank you. Next question is from Bhumika Nair from IDFC Securities. Please go ahead.
Yes, sir. Sir, in this quarter...
last question, Bhumika?
Yeah, I guess so. I think there might be... I will check with the operator, sir.
This is now 58, 43 seconds.
Yes, sir,
my clock is showing. Yeah, tell me. You can ask questions, no problem.
Yes, sir. So just wanted to check, quarter we saw a very sharp jump in the double stacking, from roughly about 500 odd to about 705 in 4Q. Now, this would have largely been because of further ramp up in Jagwada that would have happened?
Jagwada, Mundra, Pipavav as well.
Okay.
Mundra, Pipavav also we pushed up. You see, now we introduced BLCM rakes. These are higher capacity carrying rakes. There is an additional 7 tons carrying capacity added on each wagon. Now, these rakes we are rolling out continuously. There is now around 5-6 rakes in the circuit, but they will go up to 60 rakes in another 4-5 months. And these rakes, introduction of these high capacity rakes, this is not new procurement. Let the people don't mistake it for new procurement. This is a retrofitting. So this is an improvement in the operations by doing a retrofitting. I hope all of you understand retrofitting.
Yes, sir.
Yeah, increasing the capacity by adding some technical features. So we are able to do more double stack. So compared to earlier things, so that is going to help us. That's why I said there is still a lot of steam left in the initiatives what we have taken to carry on this year definitely.
Okay. So this year, as you said, close to 2,300 rakes we have, double stack. So, which is more than double of FY17 double stacking that we did. What is the kind of increase that we can look at for FY19?
See, the opportunity with the new retrofitted wagons is there that at least another 50% we can easily push. I feel 50% safely we can achieve. Beyond that, there are certain infrastructural constraints on the IR network. So Indian Railways network, if things happen without any delay, there may be quite a good possibility of ramping up these double stacks this year also. Okay.
We seem to have lost the line from Ms. Nair. We have Ms.
Yeah,
Nair.
I'm here. Sorry, I'm here. Yeah.
Yeah. Any other question?
Yes, so just one last thing on the, on these MMLPs, we kind of, seen some progress with some of these MMLPs getting commissioned last year and this year. So just wanted to check, how is the revenues from the value-added services? A part of it obviously is reflected into our numbers, but generally how is this, at these MMLPs, what would be the proportion of revenues from value-added services, if I could get some sense on that?
No, we don't do those numbers separately. But if you see, we changed our accounting policies, as I mentioned in the last quarter results also. Now there is no work in progress. Our work in progress is very less. As on the year-end, work in progress is almost 670 crores only is our work in progress. Rest all we already taken into our books. And we are providing for the depreciation and amortization. After providing all that, the results are being announced. So when we are able to grow the PAT to almost 23%, if I take out some of the other incomes, the PAT has grown by 24.3%. So that shows that there is a revenue share coming from these new facilities.
Okay. So, sir, I mean...
without other income, somebody helped me. Today morning, somebody was telling me after an analyst like you, 28.8% is the growth.
Okay.
Year on year in the PAT.
Right, sir. Right. Okay, sir. Thank you very much.
So that concludes our conference. Thank you.
Thank you very much. Right, we'll take that as the last question. I'd now like to hand the conference back to Ms. Bhumika Nair for any closing comments.
Yes, sir. Thank you very much for taking time out and being on the call and answering all our questions, as also to all the participants for being on the call. So thank you very much, sir.
Thank you, Bhumika.